We were having an amazing weekend when all of a sudden, kaboom! XRP dumped 10%, Bitcoin dumped 6 to 7%. All of a sudden, I actually saw it happen. I was looking at some my financials on Sunday evening, and I suddenly saw this crash, or you can call it a crash, a dump on the $99, which is quite significant. Obviously, it got taken down a little bit further by liquidations. And as you can see, XRP did pretty much the same thing. XRP's chart there is a little bit more stretched out because of, the logs, whatever. So it looks worse, but actually did pretty much the same thing. Okay, dumped a little bit more, 10%, whatever. Now at 2.8, it went as far down as 2.73, something like that, which is a price I really wasn't expecting, as XRP was consolidating quite nicely over the weekend, and I was expecting a bit of a pump. The whole FOMC thing had already skipped my mind. I've completely forgot about the meeting coming up this week. So obviously the Wall Street reaction and traders in the market is to always act the same way emotionally regardless, and they trade based on expectations. So this dump has nothing to do with XRP or anything else that's actually tangible, but sentiment and emotions. And of course, when trades happen like this in the stock market, it affects crypto. It affects Bitcoin directly, and that affects other cryptos, right? There are two reasons why tech stocks are dumping at the moment, and I'm going to talk about those in this video. The first thing, of course, is the FOMC meeting that I told you about just now. And of course, there's a new threat called DeepSeek, which is a big threat to tech stocks. And the reason why will become clear as we go through this article, actually. So the Trump pump, or the Trump effect, as we know, has been really good to crypto since the administration started. And even since before the administration started, it was very, very good with Bitcoin reaching all-time highs. It was very, very good with XRP doing its 5x. Now it's pumping the ISO 222 tokens, the Made in America tokens. I mean, XCN did a massive pump over the weekend. It took a bit of a dump actually, but the pump that it made was so great that it's still massively in green, even as I'm making this video with everything else in the red. But I digress. I'll talk about that a little bit later as well. So the FOMC reason why that has dumped the market a little bit is because on Monday, traders took profits ahead of the first US FOMC meeting this year, scheduled for later this week. And of course, the AI story is to do with China, and it's a China-based AI called DeepSeek, which is to impact US tech sector sentiment. Okay, so traders expect no indication of a rate cut at the two-day FOMC meeting scheduled for January 28th and January 29th. So it's still, it's tomorrow and the following day, but people are taking action already to try and preempt what's going to happen. Actually, because I saw this happen Monday night, so it would have been, Sunday night, so it would have been Monday morning in Asia, China, Japan and stuff. And I think that they kickstarted this stuff because they wanted to preempt what people do in the United States when they wake up on Monday. So as I'm making this video, the US is still asleep, so I expect to see a little bit of a dump in the coming hours to take Bitcoin maybe even a little bit lower, right? And again, we have 2 days of possible down movement till the FOMC meeting is over, and then we shall continue with our trajectory up. It just is what it is. It's emotional, right? So which has typically impacted Bitcoin prices as investors move away from risky assets, right? So US economic data shows that there may be less need for a federal interest rate cut in the near term. Managing director of Hashkey Global told CoinDesk in a Telegram message. So concerns over the trade wars and tariff linger, but a bullish sentiment remains strong as MicroStrategy and Trump World Liberty Financial continue to purchase crypto. So again, as everybody else panics and everyone else dumps because of some FOMC meeting, what Wall Street is doing, the very intelligent money, MicroStrategy, and Trump's own fund are buying. And guess who else is buying? I am buying. I bought a lot of XRP this morning. I bought some other coins as well because I know this is an irrational dip based on what always happens, and inevitably what always happens after this happens afterwards. So I have no qualms buying a little bit more XRP, which I did this morning. BTC dropped nearly 6% from Sunday's high of over 105,000, which is a steep drop coming as Asian market opened on Monday. Exactly, this is what I said. So I saw that happen in real time Sunday evening as I was going through some financials. This came despite a major catalyst on Friday when US President Donald Trump ordered the creating of a crypto policy group to advise and drive the country's industry within 6 months. So that's kind of an aggressive order by Trump. He wants to get things going right now. 6 months is really steep. All right, let's move down to the AI story. Okay, so OpenAI has previously asked for trillions of dollars in funding to build AI systems to scale and is part of the new US project Stargate, which has attracted $500 billion in investments and includes Trump, SoftBank, and Oracle to build AI data centers in the country. However, DeepSeek's reported cost and features threaten the established narrative of needing vast computational resources for AI innovation, potentially reducing the competitive edge of US tech firms and questioning the sustainability of their high valuations, impacting broader market sentiment and Bitcoin in the near term. Okay, so basically what it's saying is OpenAI and the United States AI platform effectively is costing orders of magnitude more than something from China. But this isn't new. A lot of things are like this. If you look at the military, if you look at the infrastructure, if you look at, even like the mortgages that people pay, things in the United States are orders of magnitude more expensive than things in China. Recently TikTok shut down, right? And people got on red note en masse in the United States. And I think for the first time in a very long time, or maybe even ever, the average person in the United States was exposed to life in China, where, the life of the middle class, the real life, not the China that we've been seeing on TikTok, which was a front, or the disinformation that's been spreading in the Western media about places like China, Taiwan, and places like that. People were able to see the real lives of the average Chinese person and their middle class lives, and people's minds were blown how much stuff they have over there for a lot less. A little bit gets a lot further in those places, and people are able to have higher qualities of life for very, very little money compared to what you have to go through in the United States to make ends meet, or don't even get me started on Britain, because whatever it is that you think you're paying for in America, we pay twice as much for here in the UK. So the cost of things in America and in Europe are orders of magnitude more than stuff that they can get done with open source software, which is basically what this DeepSeek AI platform demonstrates. By the way, this is a reported cost, not a real cost. So there's still a little bit of speculation in that, and also the features are reported. So what the investors are saying is perhaps OpenAI and all these US firms are just vastly overvalued, and we're going to see a future where people are going to divest into the East and start using like DeepSeek and Chinese AI, which has jumped forward leaps and bounds. And the reason why the Chinese market was able to jump this far forward is because in the United States and in Europe, the regulations, the authorities kept getting in the way of the development, kept getting in the way with all these regulations and interference and all that sort of stuff. We saw it in crypto. It's definitely happening in AI as well. Now with AI, I actually think there should be regulation. There should be a lot of ethical control, because generative AI has the power to do a lot of things directly to the populace that perhaps Bitcoin and crypto can't, right? But at the same time, these exorbitant costs are not necessary. A lot of this stuff can be achieved open source, using systems that already exist, leveraging parallel computing rather than have to buy all these data center servers and stuff like that. So basically the market is responding, saying that maybe the tech stocks are way overvalued, overpriced, and there might be an imminent crash. And because of this, they're pulling a little bit back from tech stocks, which always has a direct effect on Bitcoin. So what I'm trying to say is this so-called dip that we're seeing has nothing to do with crypto fundamentals or anything that's actually happening in crypto per se. It's just the macro temperature about tech generally, and the FOMC, what people think, and how much money is going to be in people's pockets to spend on things like technology. No financial advice, no political advice. I'll see you guys in the next one. Peace.